Thank you, Lisa. That was a very warm introduction. Thanks for that. Folks, before we get started today, this is going to be a long day for all of us here today. The weather isn't really all that good, so it doesn't really make sense to take too many breaks. So you will be holed up here for the better part of the day. You will be getting to know each other whether you like it or not. And before we get started, I would really like all of us to just give a round of applause to the organizers. They've done a stupendous job. We are here largely because of their efforts. They've been fantastic in terms of the organization of this conference. So again, a big round of applause to everybody who's been involved with this. Thank you. Neil Armstrong had to go to the moon to attain immortality. Steve Jobs had to create Apple, then go with the iPhone to create immortality. Senators Chris Dodd and Barney Frank did it with one piece of legislation. And the Dodd-Frank Act is the best way to be immortal in the 21st century. If you look at the details that most of us have had to ponder through in the Act, all the excruciating, painful bullets and sub-bullets that we've all had to read, understanding what it means for business, operations, technology, risk, legal, compliance, across front, middle, and back. This has been a great job-producing exercise for this country. Dodd-Frank, despite its complexities, despite its, its really painful, underpinnings, at the very least, has created a lot of business, at the very least, for lawyers, consultants, and for conference organizers. So I'm hoping that the folks here are doing well today. Before we get more into the weeds here, could all the folks who are from, let's say, either a sell-side firm, an asset manager, or anybody who would be looking at operational services or consulting services, could they just raise their hands? I just want to get a quick view on, all the folks from the sell side, from the buy side. All right. Could I get a view from all the vendors, all the folks that are mentioned here? All right. So now you know who you need to talk to after this conference is over. It's the people who just raised their hands here. In any case, there are a couple of very interesting stats that folks need to remember as part of Dodd-Frank. Some of the key stats here are some numbers I'm going to quote you. And, these are numbers that are worth remembering as we go along. 387, that's the total number of rulemaking requirements that have had to be completed by all the regulators, whether it's the SEC, the CFTC, the Federal Reserve, and you name it, all the federal authorities out there, all the rulemaking government bodies, 387 rulemaking requirements were out there, out of which 131 final rules have been completed as of this point. 145 missed deadlines so far. 102 future deadlines to watch out for in the future. $600 million. That is the size of the entire collateral management market when you really distill down the ocean. What I mean by that is this is the market for the servicing of the business. So everything that involves collateral management as a function, as an operational function, $600 million. $950 million, that's about the size of the OTC middle office. So all functions, all post-execution functions, affirmation, confirmation, independent valuations, margin collateral, that aside, accounting, reporting, reconciliations, all of that, that's about $1 billion in market size. $850 million, that's about the amount of money all the FCMs, all the clearing members are going to be making amongst themselves when we add it all together. That kind of is split between about 250 in pure fee-based revenues that the FCMs are going to make, and the rest is going to be based on the interest on the collateral that's going to be out there. 3 to 4 trillion, that's the outstanding collateral that has been posted in the market. 2 trillion, I'm sure a lot of you have heard this number, 2 trillion, that's the anticipated expected collateral squeeze that's going to be coming up.